Guys, hope you're having an amazing day. It's Nicholas here from XAU.com. In today's analysis, we're going to be taking a look at gold, US oil, Bitcoin, and Ethereum as usual. If the first time you just joined us, thanks for very helpful. Please like, share, and subscribe. And also, I strongly recommend joining our Discord community where we'll post real-time market updates, educational content, trade insights, and a whole lot more. If you want to get real-time analysis and keep in touch with the community, then you should be there. Last week we made a lot of profits from our trade activities, and I don't think you should be missing out on this week trade activities. So with that being said, if you also want to learn how to trade like a professional forex trader, or you like what we do at nfxhelp.com, then visit nfxhelp.com and subscribe to our mentorship plan so you can learn how to analyze the market as a professional and take more advantage, make more profits and stay on the profit side of the scale. All right, guys, so let's get on chat. So in today's analysis, we're going to be starting with gold. And last week we had a lot of important activities that went on in the market, especially the most interesting part was the Fed rate cuts. And the Jerome Powell cut the rate by 25 basis points, which took a significant effect on the market. Although what we saw last week was a very typical situation of sell a bad rumor and sell the news. Now this was the rate cuts. This was the era when they had that. We're gonna take a quick tour. This was where the rate cut was released, and we saw market rally first, drop down all the way to 36 for the 6 in that hour, and rose up as high as 37.07 there, about 37.04, 37.07, yeah, before dropping back down to close that day, that's yeah, around 36.59 thereabout, and that's same day. It was a terrible event, because a lot of people were expecting to see the market, spike really high after, especially when we get the short-term breakout and the reverse happened. So it was a typical case of bad rumor setting you. So this was when the rumor came up that there's likely going to be interest rate cuts, and that was due to the NFP. Remember NFP news, which we saw the result was terrible, about 22K short. So a lot of people were already pricing in the rate cuts, and by the time or prior to when the news was out, it was market was already priced in. A lot of people were taking out profits, and soon as the rate cut was released, a lot of people took out their profits, and we saw that effect in the market. So the short position was not because it was a bearish news. This was a very bullish news, and we can see that already that it was like a U turnaround in the market, and that's because yeah, everyone expected this reversal, but no one knew that how low it was going to be because gold had been in a long-term bullish market. I mean, since the beginning of this month, it has been bullish all the way down here. So it was due for a healthy correction, which we experienced, and though I was expecting us to see the drop up to 36.10 or 36.20, but market reversed at 36.30 thereabouts, so 36.34, and this buy zone, which was not bad. And so we saw this, and then followed by, excuse me, I'm gonna take this out here. Followed by the breakout we saw last week. I wasn't even expecting this to happen. This was on a Friday. I didn't expect that much market movement on the Friday. I was out of the market, so I didn't really catch this move. But it was interesting to see that the market went to close around the same price level as the Wednesday before rate cut. So that was a very interesting reversal. So if we go on a weekly scale, this would be felt like nothing even happened. Meanwhile, this short period of time was enough to like sort of liquidated a lot of traders. A lot of traders were overly leveraged. You can see the short was very heavy here, still on the volume scale. So that's exactly what we have in gold, and I'm expecting that we'll see price continue, to go higher and higher. I'm looking towards very high price in gold at least, which is getting towards $4,000 by the end of this year, following up the effect of this rate cut decision. Because Paul was also very dovish, and he said most likely there will be further rate cuts. Although they were trying to mitigates the effect of the news by saying it was a good thing. They are being strategic and whatever they're gonna say. But I'm pretty sure the market is not buying that. They've been saying for a long time that they're gonna try to curb inflation, but that has not been the case. And in the market, as you can see right now, inflation is still moving very high, and now the Fed has to chase both inflation and also have to chase both the job employment rates, which is very difficult because they are literally running out of tools to use in fight against inflation and also fight against the job. There's not so much job coming up in the state anymore. Again, there's a lot of layoffs, and the tariff has not even been helpful in any case. So all places are hot in the US market, but we'll see what happens this coming week and the rest of the month. So for now, basically this is much that happened with gold, and this is the current situation of the gold. I'm actually bullish. I'm expecting to see this continue. Although I'll be happy if we could see a short retracement back so we can get a better entry this week, because right now I'm not in this market and it's hot. But it's no big deal, guys. So I'm gonna try to see if I can go to the 1 hour time frame and show you guys what is happening, more in the markets. So the lower time frame, we can see more of the activities here. So we have this initial breakout and price, short-term price to test, and before we had a further breakout, and price is currently sitting at 36.84. The market is going to be opening up soon with the Australian session. And I believe we should see probably a short retracement back down here, or maybe not, depending on what happens. But either way, if we don't get a good entry here, then we'll be looking at buying if there's a clear breakout above 36.90. So this is our second entry level we're going to be considering. The breakout above that was the last the FOMC report. So a breakout above this level would indicate a likely continuation of the trend and markets pricing for a new all-time high. So that will be the case for us. So guys, for now, not so much has changed, and this is the current situation we see with gold. The market is still very much bullish. We are still very bullish, and I'm still very bullish. So guys, that's all for gold. I'm going to be going to US oil. Now, US oil, this is very interesting one because we took this trade in our community and we already closed it around this, and I think 62.57, yeah, thereabouts. This was a very great trade. And US oil had two parts. I shared this earlier in my trading view platform. So this was prior, excuse me, yeah. So this was prior to the move, and we're anticipating this two part A or part B, because the crude oil inventory report was surprisingly very large, and I don't really understand. I'm going to show you guys what happened last week. Just a brief second. If we go to the calendar and we look at last week on Wednesday, yeah. So the inventory report was released. Yeah, inventory reports. Where is it? Yeah, so we had a ridiculously bullish report for oil, and the news was the effects was probably already priced in, or we just yeah, yeah. So this was it. So the result was either priced in or market just didn't take it, because there was still this issue with OPEC supply hike, and that's a terrible thing. So for oil still kept dropping, and we saw that happen here. So the market could not break above this SR supply and demand zone, and definitely we saw the drop, and the drop lasted up to this point before the market closed. And I'm expecting that we should see the price drop a bit further. And if we don't get that drop, although we're already out of this trade, and I'm looking towards another entry soon, but if we don't get that drop, then most likely price will also retrace on this level, because this is also a very significant supply demand zone of SR zone. I'll just call support and resistance zone for easy understanding. Support resistance zone. So we have that this is the level, and I'm expecting that if price retrace from this level, so we could have two moves, because I still believe, usually at the beginning of the week, oil usually goes up and then it drops back down before the next inventory report is released. So I'm expecting to get something like this. We can see something like this. So if we get any level of a rally, a short-term rally, then it's a good time to short oil again. So I believe this 200-day moving average has been serving as a good resistance level. This held here, it held over there, and also it's holding here again. And I believe that it's going to keep holding. So if we get this short-term rally due to this support level, most likely we face some resistance here. Last time we tested this level, it was rejected, and most likely I think we're gonna get more rejection ahead of the Monday, Tuesday market open. So if that happens, we'll be looking towards shorting oil again here. The better entry would be around the same key supply demand zone, which is around 64.1 to 64.5. That's a good level to sell. So I'm just gonna put that here. So I can leave this for now, put that here. So you guys can know where to sell. Here is a good sell zone. Yeah. But then, of course, I'm going to be sharing more of this in the Discord community. So if you're there, you don't have to worry about all of this. You're going to get the full-time market updates on that. So, guys, that's basically much it. The chart is still the same. Nothing much has changed. On the hour time frame is still the same. We have the same market moves. And yeah, I don't see much that's going to change. This is definitely the bearish setup, but we could see a short-term reversal because the market is creeping, So I'd rather just wait for the rally or a clear breakout before I take any position anymore again on oil. So guys, that's all. So next we're going to take a look at Bitcoin. So Bitcoin has been on the fence, I'd say, because the business posted as post FOMC. FOMC was somewhere around Wednesday. We saw the drop and then price rallied up and we saw this further drop. So yeah, we don't see anything, but on our time frame, I saw this, which took a short on. And here we can see there was a bearish divergence here, and before the market started dropping back way back down. So if you notice something with Bitcoin, Bitcoin respects divergence a lot. It respects divergence a lot. So whenever you see a divergence formation on Bitcoin, always expect something to happen. This was the first. This is the 4 hour time frame. And we saw when this divergence come over here, we saw the drop, right? This was a lot. This was very heavy. So regardless of the news, it's often good to like work with technical analysis a lot of times with price action, because sometimes the market already knows what's going to happen even before it happens, and traders anticipate all these things. So you see the impact on the market before it happens. So most times, price action is also very good. This is not to undermine fundamental analysis. It's just to say that sometimes what you cannot, the news you cannot catch, you can see it in the price action. And if you trust your guts and work with very good risk management, then you should be good. Especially what happened with gold here, with the gold market. If you follow up with these charts here, especially this level before we saw this price movement, you can see if you follow up with the 10 candles of the market, you could have expected a short. Same thing, yeah. We saw this first level of movements, the same dividers again, and price move. Although I'm not gonna lie, recently gold has not been very it hasn't been a very good chart. It hasn't been following the technical impact, so it's normal for everyone to be confused. But now that there is clarity again in the market and the rate cut has been released and everything has been clear, now we know the clear direction of the market is bullish. Then these impacts are very necessary. You see the bull indication here. This was a short term. We had a good buy. This is also a very good time to buy again, from the indication as well. So back to BTC. BTC respects divergence a lot, and that's one of the key tools I use with BTC divergence and also Fibonacci retracement zones. So now we're having this divergence from last week on Friday before the market weekend close. Of course, Bitcoin does not close, but we saw that happen here and the effect is being seen right now. So what I'm just expecting is from Monday, because right now there's not so much volume, it's the weekend, most people are out, not many people are on their chats. But currently this minor support level is holding up very strong. And I believe it's going to probably hold much longer. I'm also expecting price retracement up very soon. And also considering the fact that there was a very strong rate cuts, it's necessary for us to see more bullish momentum with Bitcoin this week. We expect more market reaction, just as we've seen on gold. So this is where we currently are. And yeah, let's see how the market reacts this week. Then we'll know what to do. But the worst case scenario is we'll get a deep back into our major supply demand zone. And also, this is the block order we had around 115K. So it was a very, very key level around this price range, 114.5 to 115K. That was a good, strong block order. So I'm expecting to see price reverse on this level and head back to form a new all-time high. Most likely, we should be going back to 1.8% Fibonacci retracement level. And that will be around 118K, and that's my expectation for this week. So the next analysis, I'm just going to go down to 1 hour time frame so we can see more of the activities. Yeah, so here we can see more activities here. This is the bearish divergence. We saw the drop. But another bearish divergence again. We can see the drop rather, and then this is a hidden bullish divergence which I spotted and I placed down here. It's easy to just, it doesn't come up every time, but when it comes up, it's often very effective. So we can see price movement, and I'm expecting to see further, bullish retracements. But of course, always play safe. This is the major support zone, and this is the minor support zone. So next, we're going to take a look at this Ethereum, and this is our last chat for today. So on a longer time frame, Ethereum is still within our zones. We have this long-term chart formation on Ethereum, and I'm expecting to see price move up and retrace significantly on Monday tomorrow. I'm expecting to see a strong bullish movement. Right now it's weekend, also like Bitcoin market has not really moved very well. So this is like a very trap because we saw price drop down to the other block. The other block was somewhere around here and for 500, which is a long time, since August up to now. And price is currently consolidating right below this level. Well, it's still around the zone. If we're going to just take the zone instead of using a level, which is even more precise, so we can see price here is still around the zone. We just get this price zone and price was running around the zone, and I expect it to be like that for a while. And by next week, of course, Monday, I'm expecting to see a clear breakout above, this current trend resistance and above the support of our ascending channel. So if we get that clear breakout, then we should see price head towards this level, which was the previous all-time high around 4,950, and most likely move higher to form a new all-time high, probably around 5,100 to 5,200, which would be around the 50% viable trend retracement level. All right, guys, that is pretty much all for today's analysis. If you find this one very helpful, like I said, please like, share, and subscribe, and also share your thoughts in the Discord community and in the comment section below. Nicholas here once again, and have a great, profitable trading week. Cheers.